Hey everyone, it's Kailee Ackerman here with the Central Park Scoop and Focused Real Estate. I'm here with Peyton Fullerton today with Fairway Mortgage, and we just thought we'd talk about the fact that increasing home values may have a positive impact on your mortgage insurance if you happen to have mortgage insurance. So first of all, what is mortgage insurance or PMI?
So mortgage insurance is an extra monthly cost that is typically tapped onto mortgages with 20% down, less than 20% down at the time of purchase.
Okay, so for any of you guys who have had or purchased a home with less than 20% down, you likely had mortgage insurance, but now your home value may have gone up. So we were thinking about the fact that the mortgage insurance will automatically fall off typically at what point?
So the mortgage insurance should drop off when the new loan balance drops below 80% of the original purchase price.
Okay, but so if your home value's gone up enough, there might be a way that you could figure out if you could get rid of that mortgage insurance sooner, right?
Yes, that's right. So premature removal of mortgage insurance can happen when you've had an increase in value. And there are some rules around that if it's based off of a new value as opposed to the original purchase price. For the first 2 years, the agencies dictate that you have to have mortgage insurance unless the increase in value is due to renovations on the property.
Okay.
Between 2 and 5 years of ownership, if you can show that your new loan balance is below 75% of your new value, then you should be able to get mortgage insurance removed. And if you've owned the property for more than 5 years, then you only need to show that your new loan balance is below 80% of your new value.
Okay, so that's pretty cool. If someone wanted to kind of look into this and figure out if they could get their mortgage insurance removed prematurely, what would be the first step that they'd want to do?
So definitely best to contact your servicer, so whomever you're making your payment to every month, and ask them what they would require to document that new value.
Okay, and then the other thing would be finding out what your home is actually worth right now, right?
Yes, that's right. So typically, actually, before you contact your servicer, it might be a good idea to reach out to your realtor because they will have access to comparable sales and be able to probably give a better idea of if you might be close to that value range. And then if your realtor thinks it's a go, then your servicer can tell you what the next steps are.
Okay, so that's pretty cool. Do you know if there are fees associated with doing this?
There's not. You will have to document the new value somehow. So, and all servicers are different. It also probably depends on the market. So sometimes a full appraisal might be required. Sometimes they might just do a desktop appraisal and they may or may not dictate the appraiser. So it's really going to depend on what's required at that time. But the only fee that I can imagine would be potential is like that of an appraisal, which is like roughly $625 or so.
Okay. Are there any exceptions to this, like FHA loans, VA loans, things like that?
Yes. So VA loans don't have mortgage insurance, but FHA loans, if you put down less than 10%, then you have to have mortgage insurance for the life of the loan. If you put down more than 10%, then you have to have mortgage insurance for at least 11 years.
Okay.
So FHA is going to look a little different.
So they're more likely to have to do a refi of some sort.
Yes.
In order to. Okay. So anyway, that we don't want to get too long with this video because everyone's situation is going to be a little bit different. But basically, if you feel like your home value may have increased enough to potentially get rid of your mortgage insurance, it would be great to either reach out to your real estate broker, get an idea of what your home value is, and then reach out to your current mortgage holder or lender, or however that works, and see what the steps would be to get that removed, right?
That sounds great.
Thank you so much for being here. I appreciate it because this is something a lot of us forget about. And who wants to pay extra fees when you don't have to?
Yep.
So, all right, take care, everyone.